Good morning, everybody. My name is Irina Bobrova. I'm Chief Operating here at Pitbull Tax Software. And today, I would like to thank you, everybody, for joining us for this webinar, Collection Information Statements for Individuals, Form 433 series. I'm here today with my colleagues, Will Beiswanger, our Sales and Customer Service Representative, and Dylan Traeger, who doesn't want to show himself on camera. He's our retention manager. The topic of our discussion today is collection information statements for individuals, Form 433 series. Before we continue with the topic, let me cover some housekeeping items. I know that you have issue with handout materials. Apparently, GoToWebinar have some snag and our files are not uploading. So we are well aware of this fact. So we are going to try emailing you the handout materials during the webinar. And if it won't be possible to send to everybody because we have more than 500 attendees, then we definitely will email it to you afterwards. So don't worry, you will get your handout materials and presentation slides. So we're also going to talk to GoToWebinar to see what's going on because the files are PDF format and they're opening quite fine on my PC, but you cannot open them from the handout materials. So let's do some sound check. If you can hear me well, can you please post in the questions pane hi and where you're from, so I know that we have no problems with hearing. Okay, perfect. I have California, Las Vegas, Sarasota, Florida, Texas. Oh my God, it's moving. Connecticut, Rhode Island, Missouri, many states. So it's popping up very quickly. I cannot even read all of them. So looks like we have a lot of people, and I'm going to give you another couple minutes so that everybody continues still joining in. So yes, I'm very happy that California woke up today. It's 8 o'clock in the morning in California. It's 11 o'clock here in Florida. So yes, handout materials. Again, I would like to repeat for those who just joined that there is a snag with GoToWebinar, but we're going to email you the materials. Don't worry. So duration of today's webinar is 2 hours. It's usually we do 1 hour webinar, but today is 2 hours webinar because the topic is very immense and it will be very difficult to cover it in 1 hour. So because of this, I'm going to give you a 5 minutes break in the middle. So you can go take a coffee, use restroom, or anything else that you need to do during that time. This webinar is presented by Pitbull Tax Institute. This is our educational branch. And Pitbull Tax Institute is approved continuing education provider both by IRS and NASBA. So for this webinar, we are going to present you with 2 CE or CPE credit if you are going to continue with the webinar and attend it in full. And in order to earn these credits, you will need to answer at least 6 out of 8 polling questions that we're going to launch during the webinar. So 6 out of 8 polling questions. Listen, I'm not a big fan of very simple, dumbed down polling questions like what's your designation, EA, CPA, attorney. So I'm not that kind of gal. So be prepared. My polling questions will require a little bit more thinking than remembering who you are. So keep listening and follow the presentation so you understand what is going on and you can easily answer the questions. Again, for you to earn the CPE or CE credit, you don't need to answer that question right. I'm not here to judge you. All I want for you is to listen in and try your best to answer this polling questions. So 6 out of 8 is a requirement. When you registered for the webinar, for this webinar, if you are enrolled agent or CPA, we ask you to answer the questions whether you have this designation. And for enrolled agents, you needed to enter your PTIN number. So if you remember doing this, that's fine. If you don't remember adding your PTIN, you can post it in question pane right here. And so later when we review the questions, we see your PTIN number and we report your credit accordingly to the IRS. If you have done it during registration, you don't need to do it. We already have that information. We are going to email you CE and CP certificates in about a week or within a week after the webinar ends. So we have a lot of people attending. That's why it will take a little bit more time than usual, because the topic seems to be of good interest to all of you. That's why it will take a little bit more time, but everybody will get CE and CP certificate if you're enrolled agent or CPA. And you can ask questions using the questions pane in the control panel from GoToWebinar. Please try to stay on topic and ask questions about CIS, collection information statements, for individuals. So today's topic is individuals. So try to steer away from asking questions about businesses. So this is not a topic of our discussion for today. But we're going to try our best to answer all of your questions. And if we cannot address them during this webinar, then we are going to either email you the answer or give you a call after. I think I've covered pretty much every single housekeeping item. Again, I apologize for handout materials. We're working to get them delivered to you. There is some technical issue with GoToWebinar. But with this, without any further ado, let me start the webinar. So we're talking about collection information statements Form 433 series today. What are the learning objectives for today's webinar? So after watching this webinar, you are going to know when collection information statements is required and in what cases you need to prepare it. You are going to also distinguish what specific form or collection information statement you need to prepare in each particular case. You are going to identify the differences between assets equity calculation for various tax debt resolution cases. You are going to learn about IRS collection financial standards and whether actual or standard amounts are allowable in each category. And lastly, you're going to learn how to actually complete collection information statement line by line. So I'm going to show you exactly how to fill it out, and that's why we need quite a lot of time for today's webinar, because I'd like to address as many possible questions as possible during this webinar. So what is collection information statement? It's a financial statement that IRS generally uses to gather information about taxpayers' assets, their income and expenses, in order to determine the taxpayer's ability to pay, or in other words, reasonable collection potential. In IRS jargon, it's RCP, reasonable collection potential. Collection information statement is very complicated, and I would say in each case it can be quite lengthy and takes a lot of time to prepare, both on your end and on your client's end. Sorry, I didn't mute my phones. Before I go into types of collection information statements for individuals, let me repeat this. Collection information statement is prepared and signed by taxpayer and their spouses, if applicable, only. You, as a tax representative representing this client, and you having power of attorney for the periods covered in the case, you cannot and you should not sign this statement. Why is that? Remember, it's signed under penalties of perjury. So you have no idea whether the information in this statement provided by your client is correct and full. So I've had instances where, a lot of instances actually, when taxpayers were forgetting to include some assets, bank accounts, and that actually, that is why you don't want to sign it, because you don't want to take responsibility on yourself. So I saw in many forums that people say, well, if you have power of attorney, you can sign collection information statement for your client. Please don't do it, okay? Because it is serious responsibility and you just don't want to have it on you. So if taxpayer is married, both taxpayer and spouse must sign it. And if it's a single individual, only they have to sign it. If it is a married individual, but the spouse is non-liable, she or he, they don't need to sign collection information statements. Only liable taxpayer or taxpayers need to sign collection information statement. And this is true regardless of what forms you use, whether it's 433A, F, OIC, or any other. So just remember this. So next let's talk about types of collection information statements. So there are 4 different types. 433A, collection information statements for wage earners and self-employed individuals. It is usually used when you prepare installment agreement and collection and currently not collectible case, CNC. So Form 433A is for installment agreements and CNC. And you provide this form when you work mainly with revenue officers or field employees. So 433A is for installment agreements and CNC. And for cases that are worked by revenue officers. The second type of collection information statements is 433A OIC. This is collection information statements for wage earners and self-employed individuals, but it is used only for offer in compromise cases. There is one exception where you don't need to use it for offer in compromise case when your offer is doubt as to liability. So DATL offers, they don't require submission of collection information statement. So 433A OIC will only be required whether for OIC doubt as to collectability or effective tax administration offers. And the third form type of collection information statement is 433F. It is called usually a short form because of its size. So it's only 2-page form, very short and doesn't go into very much detail like the other two option types. So 433F is collection information statement, and usually you need to present this when you work with ACS, Automated Collection System. 433F, like I said, is a short form. And the fourth type is 433H. We got quite some questions about this new form. It's fairly recently introduced form, and basically this form is a combination of two forms. It's a combination of form 9465, installment agreement request, and 433F. So it's a 3-page form. We do not have it in Pitbull tax software yet. We do plan to add it later, but I am still not quite convinced about this form because I don't understand why would I need it ever, but maybe some of you will need. First of all, this form cannot be used for self-employed individuals. So if 433F can be used for wage earners and self-employed individuals, 433H cannot be. It's only for wage earners. And it's submitted if liability is over $50,000 and the taxpayer cannot pay it within 72 months. So if streamlining is not possible, you are not going to you're going to present 433H. Personally, I never fill out 9465. Never in my life did I submit to the IRS 9465. Yes, we do have it in Pitbull tax software, but it is mostly used when you file a tax return and you want to establish an installment agreement for the tax liability that the taxpayer cannot pay. But in tax resolution arena, I've never used 9465. I only use 433D because I always convince my clients to go with direct debit installment agreement. So 433D is required. Why go with 9465 when you can just do 433D directly? With 9465, yes, you can fill it out. The IRS will think about it. They'll say, yes, we'll go with it. If you want direct debit, please fill out 433D regardless. So for this reason, I'm not quite sure anybody will use it, but yes, we're going to add 433H later in the process. So these are the 4 types of collection information statements. I'm going to launch the first poll for today. And I can see it very small. Which collection information statement is usually referred to as a short form? 433A, 433H, 433F, or 433A OIC? I'm going to give you a few seconds to complete it. Again, I'm not judging you by the answers. I just want you to be attentive. I see a lot of your questions saying that you cannot answer on screen, but on my results, I see. So just select the option. You don't need to submit it because I see like 83% of you already voted. So the polls are being submitted. You need to minimize the screen to answer it. Maybe. So let's see, I see 86% already voted. So I think it's working. Yes, it worked when I minimized the class. Okay, I guess GoToWebinar has some systemic issues today, even with the poll. So try to minimize the class and you will be able to answer the polling questions. I apologize, but technology is something that we don't have control over here. Okay, 89% voted, 90% voted. Good. It works when you minimize a window. Perfect. Thank you so much for sharing your experiences, and let us go through this. Again, we are going to launch 8 polling questions today, so only 6 are required. If you cannot do it this one, you still have chance with other questions. So don't worry about it. So I see 92% voted. Let's give another 5 seconds. 5, 4, 3, 2, 1. And I'm going to close the polling question. Yes, the correct answer is 433F. So 70% of you answered it correctly. So short form, it's called because of its length. It's only 2-page form. That's why it's called short collection information statement for individuals. Okay, let's continue with our presentation. And let's talk about when to use each collection information statement briefly. I did it a few minutes ago, but let's reiterate. So it can be used for installment increments, currently not collectible status cases, and offer in compromise. So installment agreements and currently not collectible statuses worked by revenue officers usually require 433A form. However, not many people know that for cases worked by revenue officers, in some instances, you can still use 433F. This has been changed in IRM back in 2012, but I still see that many people, even revenue officers, they don't know that. So they don't know that they can request 433F instead of 433A. I know some people, it's very difficult to change for them, so they're used to requesting 433A, but 433F is the only thing you can do. It works with revenue officers for trust fund recovery penalty under $100,000, and for individual tax liability for individual taxpayers under 250,000. So if you have a case falling in this criteria, you can definitely submit 433F. Of course, if revenue officer insists on getting 433A, I wouldn't argue and submit 433A instead. And because with people tax, it's easy to do. So even if you prepare 433F, you can easily switch to 433A with one click of a button, which I'm going to show you how to do later. And offer in compromise cases always require collection information statements on 433A OIC. So we are talking about individual taxpayers today. So 433 AOIC is what you are submitting with offering compromise cases. Let's talk about supporting documents for collection information statements. Offering compromise cases always require supporting documents. So you always need to send them bank statements copies for the last 3 months, or if businesses involves self-employed business for the last 6 months. You always need to provide the latest pay stubs, earning records, if applicable W-2s. You also need to send them the mortgage statements, if applicable, car loan statements, student loan payments, and so on and so forth. So when you're working with offering compromise cases, supporting documents are required. However, 433A and 433F, it's not required to submit supporting documents with your initial submission. The IRS instructions are very clear that you don't need to do them with initial submission. However, it says that they may request you later to substantiate some of the expenses. So you need to be prepared and have them handy in order to not wait for the client later. Okay, let me send you my documents and it will be in a month or so. Anyway, when you prepare a collection information statement in Pitbull Tax, you need to have those documents because, well, let's speak the truth. You cannot always trust what your clients tell you, right? So in this case, have it handy, but you don't need to submit it together with 433A or F. So when is collection information statement required? Until last week, I was very sure I know the answer. But last week something happened that I didn't envision for today's webinar, but it did happen. So Eric Green is a tax attorney with Tax Network, Tax Help Network, I believe his company is. He had a webinar and he shared some materials from the unpublished Internal Revenue Manual code that is not available online today. And apparently he got this information from the Director of Collections, and I believe this source is legitimate. A slide from his presentation was shared with me by one of our customers, Sharon Morgan, I believe. And I did share this slide in our Pitbull Tax community, our Facebook group. So I cannot share it today because this is not my information, and it's probably copyrighted material by Eric Green. That's why I prefer not to share it here. But if you are a member on Pitbull Tax community page, you can go and under files, you can see that slide. I checked last night and that IRM section still is not updated, but I believe it is legitimate. So basically what it says, I call it a quiet death of expanded installment agreement, expanded streamlined installment agreement. The IRS eliminated this type of agreement because they relaxed the non-streamlined installment agreement requirements. So right now, financials are not going to be required for cases with individual tax liability and out of business sole proprietor tax liability if the liability is under $100,000 and the case is worked by field assistants employees. Field assistants is, you can, one example is revenue officers. So if you work with revenue officer and you have individual tax liability and out of business sole proprietor liability under 100K, you do not need to prepare collection information statement. Great news. So we don't need to do as much in order to achieve what we want to achieve. In that case, maybe installment agreement or CNC. And if the case is still with ACS or ACSS, which stands for Automated Collection Services Support, and also with Compliance Services Collection Operations, CSCO. So if your case is with those 3 units, the same true for liabilities under $250,000. So let's cover that. So collection information statement will be required if you're requesting an installment agreement for individual taxpayer and out of business sole proprietor, and summary balance. Summary balance stands for unpaid assessed balance of tax, penalties, and interest. And summary balance is over $100,000. And the case is handled by FA, field assistance employees, for example, revenue officers. So in that case, collection information statement is going to be required. So if you are requesting installment agreement or CNC for individual taxpayer and out of business sole proprietor with unpaid assessed balance over 100,000, and the case is worked by revenue officer. So this is a requirement number 1. Let me quickly explain you what is a summary balance. Unpaid assessed balance of tax, penalties, and interest. So when you file your tax return, your client's tax return, and it has a balance due, at the time of processing the return, the IRS assesses the balance, the tax, and they assess interest and penalty for example, late filing penalty or late payment penalty, or both. So at that exact day, you count this as assessed balance of tax, penalties, and interest. The summary balance does not include accrued penalties that are going to be assessed later in the game. So if 3 months from the first assessment, the IRS assessed additional penalties and interest, that those amounts will not be included in the summary balance. And summary, it's just code from the IRM and from their system. So it's not abbreviation, so don't try to like see what it stands for. Just know summary balance is unpaid assessed balance of tax, penalties, and interest. And our software actually calculates that balance. And you can find it under our transcript reports, income tax liability report. 1 column before the end, it says unpaid assessed balance. So that is actually summary balance. We didn't want to confuse you with summary in the header. That's why it says unpaid assessed balance, but that's exactly what it is for. So when the IRS actually tries to determine whether your client is eligible for streamlined installment agreement, let's say liability is under $50,000, they are looking at the summary balance. They don't look at the balance with accrued penalties and interest. So the actual balance with accrued penalty and interest can be, let's say, $55,000, but because summary balance is under 50, you will be able to establish streamlined installment agreements over 72 months. Very often confused terminology. And if your client is audited and they get additional assessment of taxes, summary balance will also include the additional tax assessment and penalties and interest assessed at the same time. So it's kind of complicated, but easy to understand once you think about it for a minute. So this is the first requirement. Summary balance over 100,000 and individual liabilities and out of business sole proprietor over 100 will require submission of collection information statement. I'm going to launch second polling question right now and hope that it works better. And I'm gonna see if I can read it. Supporting documentation is not required with initial submission of which IRS forms? Select all that apply. So this is not just one multiple choice question. You need to select all that apply, and I'm going to give you about a minute. So again, if you have problems with answering the poll, try to minimize the class, and you will probably be able to see it. Okay, about 82% of you voted. Remember, we need to answer 6 out of 8 polling questions. Okay, another 5 seconds. 5, 4, 3, 2, 1, and I'm going to close the polling question. Okay, so the correct answer is 433A, 433H, and 433F. I know it's a tricky question. I did tell you before that it's 433A and F. And then in the beginning, I said that 433H is a combination of 9465 and F. So in this case, you can kind of figure out that it will not be required to submit a supporting documentation together with H as well. And the instructions for this form say the same. So the correct answer is 433A, H, and F. Don't feel bad if you didn't answer it correct. So that's not the point. So next, when collection information statement is required. When you're requesting installment agreement for individual taxpayer and out of business sole proprietor and summary balance is over $250,000 and the case is handled by ACS, ACSS, and CSCO employees. So in this case, you need to submit collection information statement. Remember, I told you that this is something new that we didn't know a week ago. And so pay attention, and maybe it will help you with cases that you're currently handling and helping clients. And I got some emails from customers that's exactly the news that is going to help them tremendously now. The next requirement for submission of collection information statement is when you request installment agreement for in-business sole proprietor and summary balance is over $25,000. Remember, streamlined installment agreement under 50 applies only to individual tax liability and out of business sole proprietors. So here, if you have sole proprietor that is still in business, the collection information statement will be required when the summary balance is over $25,000. So remember that. Another requirement when you're requesting partial pay installment agreement, regardless of the amount of unpaid assessed tax, penalties, and interest. The IRM does have a section where it says that for smaller amounts of partial pay installment agreement, they may not request financials. However, they do not publish what is that smaller amount, and usually I tend to submit supporting documents with all of my partial pay installment agreements. And let me just quickly tell you what is my preferred way of submitting installment agreement request. Yes, you can do them by mail. You can do them on the phone. You can do some online. If liability is under $50,000, you can do OPA, online payment agreement. I like online option, but it doesn't work in majority of the cases, at least with me. I think I did maybe 5-6 of them over the years. Most of my clients, I do installment agreements over the phone, even if it's partial pay installment agreement, because it's faster. I don't want to sit and wait until they get the mail. Mail can be lost anyway, even though I sent everything to IRS certified mail with return receipt. But phone tend to be very fast for me, not very fast per se, but faster than mail. And even with partial pay installment agreements, you can fax them all supporting documentation and your collection information statement. They will attach it to file, and they will send it for review to group managers. So partial pay installment agreements always require approval of group manager. So be prepared that not only one person will be looking it over. So it's not like streamlined installment agreement under $50,000, which doesn't require any financials. This one will most likely require financials, and it will be looked over by more than one IRS employee. The next requirement for filing collection information statements is offering compromise for individual taxpayer, regardless of the amount of unpaid assessed tax, penalties, and interest. And it is not applied for doubt as to liability offering compromise. Remember, for those cases, collection information statement is not required. And finally, the last requirement is when you're requesting a currently not collectible status, regardless of the amount of unpaid assessed tax, penalties, and interest. For CNC cases, yes, but there is one exception. So there is CNC exception processing, and here I posted a quote from the IRM section 519.17.241, and it says that financials are not required before reporting an account as CNC if some criteria are met. They don't disclose, again, they don't publish the amount less than what amount need to be. But conditions must be present. One of the following conditions should exist. So taxpayer has a terminal illness or excessive medical bills. Taxpayer is incarcerated. Taxpayer's only source of income is Social Security, welfare, or unemployment. And taxpayer is unemployed with no source of income. So if one of these conditions exists, and you have not quite large CNC, IRS tax liability balance, you may be able to do a CNC without submitting financials. So, and it started raining. It's been pouring here in South Florida for the last 3 days, and it's starting raining again. So hopefully there won't be any interruption with connection. So these are the requirements for submitting collection information statement. And now let's talk about when you need to complete each of the forms. So you may need to complete 433A for individual taxpayer who owes income taxes on 1040. For a person who is responsible for trust fund recovery penalty, if the individual is personally responsible for partnership liability, for individual owner of limited liability company that is a disregarded entity, or for a self-employed person. So in those cases, 433A may be necessary. 433A OIC is submitted for individuals who owe income taxes on Form 1040. For personal liability for excise tax, individual responsible for trust fund recovery penalty, for self-employed individuals, for individuals who are personally responsible for partnership liability, for individual who operated a disregarded single-member LLC taxed as a sole proprietor prior to 2009. This is where a lot of confusion hits, and we have a lot of questions from customers always on this. So if you have a disregarded single-member LLC, basically they file Schedule C on their 1040, and you have IRS liabilities for that business. Prior to 2009, you can submit for 433A OIC. However, when you do offering compromise for single-member LLC and they owe tax debts for 2009 and onwards and after 2009, then you need to prepare a different form, 433B OIC. So this is very significant. So you don't want to submit an offer with a wrong form. So if you have single member LLC with liabilities after 2009, you need to prepare 433B OIC instead. And finally, the 433A OIC can be filed on behalf of the estate of a deceased person. So these are the options where you need to complete 433A OIC. 433F is for individual with 1040 liabilities, individual owner of limited liability company, regardless where it happened, when it happened, and for self-employed individual. So these three options, for these three options, you may need to prepare 433F. And now, before we go into defaults for tax resolution purposes, I want to talk to you about how we are going to complete line by line each field on collection information statement. So before we do that, let me launch the third polling question. If case is currently with ACS, collection information statement is required for, please select one answer, individual taxpayer with liability of $100,000, out of business sole proprietor with liability of $200,000, in business sole proprietor with liability of $50,000, and individual taxpayer with liability of $200,000. Only one answer is correct, so please post your answers. And after that, we're going to start with completing collection information statements. Again, if you just joined and you cannot answer polling question, please minimize your class and you will see that polling question. Something is definitely going on with GoToWebinar today. And we have some snags with handout materials and with polling questions. Hopefully, there won't be any other significant issues. I'm going to give you about 10 more seconds. I see 85% of you voted. So let's try to finish this question. And I'm closing the poll in 5. And Jose just told me that all handout materials were sent to you via email. So again, we apologize for this technical issue. Please check your emails. All materials should be delivered to you. There are 2 files, one handout materials PDF file, and another one is presentation slides. Okay, I'm going to close the poll in 5, 4, 3, 2, 1. And the correct answer is in business sole proprietor with liability of $50,000. So if your case is currently with ACS, any liability for in business sole proprietor over 25,000 will require submission of collection information statement. So only 29% of you answered correctly. Majority answered individual taxpayer with liability of $100,000 and the case is handled by ACS. Remember of this new IRM section that is still not published, but where it says individual tax liability over 250,000 and cases handled by ACS employees will be requiring collection information statement. Okay, so now let's talk about how to actually complete this collection information statements. We did some theory. Let's dive into the practice. So I'm showing here Pitbull Tax Software and Form 433A and 433A OIC. So we have combined input for these 2 forms in our software. If you are not currently a Pitbull Tax user, so I just want to explain you why we did this. If you are, you may already know the answer. So the information required for these 2 forms is very, very similar. These are different forms, but the information required is very, very similar. So we don't want you to fill the data twice. So we have one data entry, but you can output 2 different files. And up until like last month, we had a ton of questions saying, you only show me 433A OIC, how can I get 433A? Or the other way, I can only print 433A and you don't have 433 OIC. Yes, we do have it. And because of all these questions, we've added this note here. In order to create Form 433A on monthly living expenses, and this is a hyperlink that you can click and you can go there, you need to select option under installment agreement or CNC status. So if you do that and save that page, the output will create 433A. If you want to create 433A OIC, on that same page, you need to select either option under offer in compromise. So we'll get to that page. You will see what exactly I'm talking about. But let me just explain the difference. So 433A, remember, it's required for installment agreements and CNC, 433A OIC for offer in compromise cases. So all of our forms have heading. You can type any heading that you need. For example, anything that I mail to the IRS, I mail via certified mail USPS with return receipt. So in this heading, on the first page only, I always print the certified mail receipt number, and it is printed on in the top margin of my form. So that's easy to use, and if you want to use this option, just know about this. Like with every single form, we have ability to create different copies of the forms. So for example, you had a case with this client 2 years ago, and you did installment agreement and they defaulted. No big deal. You can go and create a copy of the form and create a new collection information statement if you want to keep the old one on file. Of course, you can override the data from the previous one, but sometimes a lot of customers of ours, and myself included, we prefer to have a different copy. So when you click on copy, you are offered an option to copy the data from the previous form, or you can start from scratch. So just know about this. So 433A and AOIC, let's go line by line. In the software, we do recommend to fill out personal information for the taxpayer and the spouse in the client profile. In that case, you don't need to retype the names and social security numbers and addresses on every single form. So this information flew directly from client profile. So wherever you see this shaking pitbull hats, it is a tip. You can click on it and you can read what it says. It is usually not a good idea to have ACS personnel or IRS revenue officers speaking directly with your client. For this reason, you may want to put your phone number as a representative in this area and clearly note as such by checking the POA power of attorney box next to it. So when you check the box, this is a taxpayer's phone number that was entered in the profile. However, when you check POA, your phone number from your representative settings will pre-fill, and it will be printed on the PDF with POA in parentheses next to it. So we always recommend to do that. Don't worry, you won't see on your software this little icons with RoboForm. This is my browser, and this is the latest edition of RoboForm that they allow you to pre-fill the data from your profile. This is a password manager, by the way. Then you enter the dependents and other persons in the household on that same page. So here in this case, I entered a mother, Sandy White. She is claimed as dependent on 1040, and she also contributes to household income. And another dependent is daughter, Kathy Miller, and she is claimed as a dependent, but she doesn't contribute anything to the household. She's too young to have any income. So this is a personal information page. And I think it's time for a break. It's 12 o'clock here. So I'm going to give you, I'm going to launch the fourth question during the break, but I'm going to keep it open for a while until you come back. So let's come back in 5 minutes. And in this case, we were able to sit through the entire 2 hours, okay? Well, Dylan, Jose is going to share with you links for handout materials and presentation slides. If you can please post it to question pane and share with all. It was emailed to attendees, but just in case they didn't get it.
Yeah, no worries. Okay. I'll go ahead and send it now. He sent it to me earlier.
Okay, perfect. Thank you.
And then I asked, no worries.
Again, fourth question for polling. If you don't see it, please minimize your class and you should be able to see a polling question. The break ends in 1 minute. Deborah, unfortunately, the polls is outside of our control. It's GoToWebinar technology. So I know that a lot of users are answering it. Please try to minimize or enlarge your class and you should be able to see the polls. If for some reason you cannot answer the poll, put it in the questions, your answer, and we will continue to review all the questions after the webinar ends. And we're going to issue CV credit regardless if we find the answers through there, okay? Okay, it's 5 minutes past 12, so let's come back to the class. I'm going to read the last polling question. Disregarded entity, single member LLC, wants to submit offering compromise for 2015, 16, and 2017 liabilities. Which collection information statement form do you need to prepare? 433 AOIC, 433H, 433B OIC, 433A, or Form 656? I see 89% voted. So I'm going to close this polling question in 5, 4, 3, 2, 1. 43% of you answered correctly, and 45% chose 433 AOIC. Remember, I was talking about disregarded entity, single member LLC. For liabilities after 2009, you need to prepare 433B OIC. So that is correct answer, 433B OIC. If you got it wrong, don't worry. It's not the answer that is important. It's the attention that we need. Okay, let's continue with completion of 433A, 433 AOIC. The marital status page. So very important page, especially for cases where there is a non-liable spouse or non-liable person. So you need to answer whether they're married, unmarried, or married filing separate offer for joint liabilities. And there is a pitbull tip here. So you can refer to it because we don't have much time. I'm gonna just skip through it. In this case, the taxpayer is married. You enter date of marriage. It's fairly recent marriage, and the spouse for the taxes owed is not liable. So we have non-liable spouse situation where she has income. And we have another pitbull tip here that you can look through. And I'm going to explain how it's going to affect our calculations. So in this screen after, once you selected that amount provided by non-liable spouse on a monthly basis, amount provided to the household. So how much she or he contributes on a monthly basis to the household. So she contributes $1,500 out of her wages. It may not be necessarily the entire wages that she has. This is a very big confusion a lot of users get. So once they enter field named wages or dividends or net business income, they enter their entire income for that non-liable spouse. It's not required. So you need to enter only how much they actually contribute. So if she gives to the taxpayer $1,500 a month, and you can document it, let's say if they have a joint bank account and she transferred from her account $1,500, that's exactly the proof that this is her contribution. She may earn $5,000 a month, but she spends it on her hair, her salons, her clothing and stuff like that. So $1,500 is all what she gives in this particular case. After that, you have options to select which household expenses are shared by non-liable spouse. It can be all of them, it can be some. So in this case, I selected food, clothing, and miscellaneous, housing, utilities, health insurance, out-of-pocket health care, and child-dependent care. So this 5 types of categories she contributes to. And the software is going to calculate the allowable prorated expense for the taxpayer that he can claim on his collection information statement. We have another option here, another checkbox that says you can include non-liable spouse's income in total income for offer in compromise calculation purposes. So when this is used, for example, if you have non-liable spouse that doesn't make much money or doesn't contribute much money to the household anyway, she may make millions, but she doesn't give to taxpayer anything, you can include her income in total income for offer in compromise calculation purposes. It is useful when it's zero or very little amount. So you can include her income in total income. And in this case, full expenses for 2 people or more, if they have more dependents, will be included in the offer or installment agreement or CNC. So in this case, it is beneficial for you to include their income. But requirements are that you don't need to include income of a non-liable spouse into the collection information statement. You can also print optional heading statement for non-liable spouse on top of page 1 of Form 433A that it does not include assets of non-liable spouse except joint assets if and when indicated. So you can print this statement on top of 433A. You can print only name without optional heading, or you can print neither. So Pitbull tip is provided for you to guide you in this particular section. Then we have other non-liable person section. And remember, we have Cindy White, who is a mother of, I believe Jennifer is the name of our spouse here. And she does contribute $300 on a monthly basis towards family budget. So, and she shares with taxpayers food, clothing, and miscellaneous items. So she obviously eats together with the family, and she wants to give some money to make a contribution. So in this case, we marked that she is sharing food, clothing, and miscellaneous, and she contributes $300 a month. So everywhere here is a lot of Pitbull tips. So whenever you are in the form, take your time and read those. Next page is taxpayer and spouse information. Very straightforward. Driver license numbers, date of birth, and social security numbers. They are pre-filled from the client profile. You only need to enter here driver license numbers. So next page is employment information page. Again, a lot of confusion when non-liable spouse is employed. A lot of people say yes, that spouse is employed, and they enter her employment data here. Remember, spouse is not employed, and is non-liable. And on marital status page, we already entered her contribution on a monthly basis towards family household expenses. So we don't need to enter anything here. And for our taxpayer, I chose a case where taxpayer is self-employed. So James Miller, he is self-employed, and we're going to enter his business information later. So are you employed? Both for both taxpayer and spouse, we answered no. Other information page. Very important for you to answer all of them. Questions about lawsuits. If you have been party to a lawsuit, yes or no. A lawsuit involving IRS United States, yes or no. Bankruptcies. Are you currently in bankruptcy? This question is very important for those of you who want to file offer in compromise. So if you answer yes right away, it will stop you that you cannot file offer in compromise if you're already in bankruptcy. So Have you filed bankruptcy in the last 7 years? Yes or no? And have you ever filed bankruptcy? And if yes, so you can enter the case details right here. Residence outside of United States. So in the past 10 years, has individual resided outside of United States for periods of 6 months or longer? Yes or no? A lot of people don't know that this question relates to collection statute expiration date. So collection statute expiration date is extended if the person resides overseas for more than 6 months. So in this case, it tolls the statute. So it's very important for you to know the answer. Don't, by default, I see a lot of people, they say, no, 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 no. They don't even read the questions. Please don't do that and read the questions carefully. Assets of outside of United States, yes or no? Beneficiary of the trust or estate, trustee, fiduciary, or contributor. Do you have any funds being held in trust by a third party? No. Safe deposit box. A lot of people miss that question. You need to answer it truthfully. So again, remember, we signed this statement, taxpayers signed this statement under penalty of perjury, so they need to know. Even if they have saved a deposit box unknown to a spouse, they need to disclose it. So in this case, yes, safe deposit box they have, and you have to provide contents of this deposit box and what is approximate value of the contents. Transfer of assets in the past 10 years, if any assets been transferred, yes or no, and transfers of real property. So this is very important in order to figure out if there were dissipated assets and whether they need to be included in reasonable collection potential. Next page, personal bank accounts. Cash on hand includes cash that is not in the bank. So I just answered $50 for this particular case. Personal bank accounts. You need to enter domestic and foreign bank accounts. So be careful here. Foreign bank accounts are required for disclosure. I've entered 2 bank accounts with Wells Fargo, checking and savings, both owned 100% by the taxpayers. I'm sorry, and these are account balances, so total 2931. Important note under this particular table, funds listed on bank accounts are used to pay for monthly allowable living expenses, and we do have a pitbull tip here. A lot of people know from the IRS forms that bank account balances is reduced by $1,000 automatically. However, not many people they know that bank account balance equity is actually also reduced by allowable living expenses and then additional $1,000. It cannot adjust below zero. So if your monthly living expenses are, let's say, $5,000 and additional $1, and you only have $2,900 on your bank account balance, then it will not go into negative. It will be zero as adjusted balance. So make sure to check this box when you work offering compromise case. It's not important for other cases. For installment agreement and CNC cases, this checkbox will not do anything. You can still check it in case you're going to switch to offering compromise later. But for installment agreement and CNC, it's not relevant. We do have another box here. I want to override exclusion amount from bank asset equity. In this case, you want to enter your own exclusion amount and enter explanation why you want to include it. It can be relevant for, let's say you have close to retirement taxpayer who has $50,000 on a savings account, and they don't have a job, and they are about to start getting their retirement benefits, and when they will actually need this $50,000 in order to survive. So you may explain why you want to exclude $50,000 from calculation of reasonable collection potential. And this is the place where you are going to do it. For this particular case, I'm going to just check the first box. Next page is investments. So folks, don't pay attention to this. It's probably internet connection when we have a lot of bandwidths going on for the webinar. So it loads if I refresh it. I entered here an IRA that the client, James Miller, has with UBS Financial. And it is a qualified plan, so I answered yes. So the software does a lot of calculations behind the scene in order for you to arrive to the lowest possible equity. Why do we need lowest possible equity? Because it reduces our offer amount. So in this particular case, I answered that combined federal and state tax rate, if they need to liquidate this qualified plan, this IRA, they are going to pay 21% in federal and state tax rate. The client is in Florida, so we don't have state tax rate, so he's in a 21% bracket. And the tax on this distribution will be $5,152. And the client is less than 59 and a half years of age, so additional 10% penalty will be imposed. So basically 31% will be expensed on liquidating of this IRA. And the software calculated the current value to $16,927, which is basically $24,532 minus $5,152 and minus additional tax of 10%. So that produces a quick sale value and individual asset value OIC for $16,927. The IRS usually allows on assets 80% quick sale value. Here we are losing 31% in related expenses. So quick sale value here is 69%. In this case, it's to our advantage to answer all those questions, and especially for taxpayers who live in states with state income tax, your percentages will be probably much higher, and it's definitely easier for you to generate lower equity for investment assets. So be sure to answer those questions. And like with any other pages, you can add as many records under investments. So in this case, he has only one IRA. Virtual currency. Virtual currency is a relatively new section that IRS introduced, I believe, last year. So now you need to disclose all your Bitcoins, Ethereum, Litecoins, Ripples, and everything that is going to be included in the reasonable collection potential. So he has only one Bitcoin, and the value in US dollars is 8,625. Individual asset value is 80%. Quick sale value 6,900. So in this case, it's this particular. Okay, before we go into next session, let me launch next polling question, number 5. And let me see how I can read it. Offering compromise doubt as to liability for individual taxpayer requires submission of Form 433A OIC. True or false? Simple question. Let's get through it quickly because we are having a lot of material to cover still. I still see folks that you are answering in questions, your answers. Yes, we're going to count though your answers. I'm not sure why still we have technical issues, but it is what it is. I guess GoToWebinar had a nice Memorial Day weekend, and they're not fully back up. Okay, we have 87% voted, so I'm going to close this poll in 5, 4, 3, 2, 1. And the correct answer is false. So 55% of you answered correctly, 45% said it's true. So for doubt as to liability offers, collection information statements are not required. So next page, available credit. So if you're doing offering compromise case and you're submitting 433A OIC, you don't need to submit to complete this form. It's basically information about credit cards or lines of credit that is available to the taxpayer. But I've answered it anyway because I want to prepare 433A and 433A OIC. So he has 2 credit cards, American Express and Visa card, and available credit and amount owed is entered. Next page is life insurance. We did put explanation here that you don't need to include term life insurance in here. You only have to enter the policy that has a cash value, like whole life life insurance. So in this case, he does have a New York Life whole life policy, and current cash value is $14,520. There is no outstanding loan balance, so available cash will be like this. And if we do offering compromise, it will be quick sale value, 80% of that amount. Next page is real property. So you need to answer questions whether you own home, rent, or share a rent or live with relative. And the latest edition of 433A OIC added another question here. Is your real property currently for sale, or do you anticipate selling your real property? Yes or no? And if you check yes, you need to answer another question. What's your listing price? Or you can check the box, it's not listed yet. Then you enter the information about real properties. So this taxpayer has 2 of them. He has a townhouse for primary residence and 1 rental property. So townhouse, once you select primary residence here in the drop-down menu, automatically the system is going to pre-fill the client's address from the profile. You will need to enter how the property is titled. So he owns it by himself, it's sole ownership, it was purchased, the lease date or purchase date, current fair market value, and you need to enter mortgage balance. Monthly mortgage amount is entered right here on this screen, and lender's information. Again, quick sale value is 80% of fair market value, and you deduct loan balance from that amount, and you get your OIC balance, OIC equity for this real estate. Again, 80% is applied only for offering compromise cases. It's not applied for installment agreement or CNC cases. And the same thing, we entered his rental property, and it's right here. We get a lot of questions about primary residence that has 2 mortgages on it. One is primary mortgage and the other one is HELOC, home equity line of credit. So HELOC is not entered separately, because if you do, then you will have duplication. So you will enter because it's secured by the same property, basically 2 loans, 1 property. If you enter 2 records, you will duplicate your available equity for purposes of calculations, and you don't want to do that. So what you do when you have a HELOC, you enter the total loan balance, combined loan balance for both loans, your HELOC and first mortgage, in the current loan balance. And on the monthly mortgage, you enter only amount from your primary mortgage. And for the HELOC monthly payment, you are going to enter it under monthly living expenses page under secured debts. And I'm going to show you this taxpayer does have a HELOC. So real property. Next page is personal vehicles leased and purchased. Again, a lot of confusion always on these pages. And the IRS provides allowance for vehicles, $3,450 for each vehicle, up to 2 vehicles maximum if it's a joint filer, and for single taxpayer or non-liable taxpayer, whether they file, even if they file married filing jointly right now, they allow only 1. So $3,450 is allowance. He has 2015 Ford Explorer, it's purchased. OIC value is 0 because loan balance exceeds current fair market value, and monthly payment is $428. He also has a 2001 Chevy Camaro, and fair market value is $1,200, and OIC value comes to 80% of it, $960. There is no loan balance on that Chevy Camaro. But IRS only allows $3,450. Remember, I just said non-liable taxpayers, cases with non-liable spouse will have allowance only for 1 car. Here, I want to pay you attention to put your attention to this little icons. It's like crossing. We made it so you can switch the position of the vehicles. And this is done because you may enter vehicles in no particular order, but you want to see on which vehicle you want to get this IRS allowance applied. So if you see that when I put Chevy Camaro on the first position, the OIC value 960 was reduced by IRS allowance. So now adjusted value for OIC purposes is 0. But it's not quite correct for situations where the taxpayer doesn't use it. So the taxpayer in this particular case, rarely uses his car. It sits in his garage, and maybe once in a blue moon, he takes it out and go for a ride with friends. So in this case, I want to have it on the second position. In this case, adjusted vehicle value for OIC purposes will still be $960. If you have 2 cars and you have non-liable spouse situation here, and you both cars are used, you need to put on the first position the one that has a larger OIC value so that you reduce it. But again, you have to be very cautious here and know that these toggles are moving the position of vehicles in your grid. Next page is personal assets. So I've entered here furniture and personal effects. Even though for OIC value it shows $1,600 and $2,400, there is a statutory exemption from levy under IRC 6334A2. And for 2020, this allowance is $9,690. So basically, the OIC value will be 0 after we take this exemption. The software does it automatically, so you don't need to make any extra calculations. But since about 2 years, I would say. Before, offering compromise cases did not require entering furniture and personal effects assets, but now they do require. You need to disclose it because I guess some folks have expensive furniture and expensive personal effects, which doesn't work often in many cases. So next page is monthly income page, and that's you have to be very careful entering that data. So the first 2 lines are wages for taxpayer and liable spouse. Remember, we didn't have anything, we don't have employed taxpayer or spouse in this case. He's self-employed and she is non-liable. So in this case, there is no information under gross monthly income. And even if you click on the details for this item, your entries show that taxpayer is not employed. So if you want to make changes, you click edit and you will go back to employment information page and you will make the entries that you need. And the software automatically calculates gross monthly income, even if you entered paycheck, let's say paid bi-weekly. So pay good attention when you enter employment information data that paycheck frequency makes a lot of sense because the software determines the monthly income based on that payment frequency. Then in this particular case, I entered that the taxpayer earned $24 interest on his 2019 1040. This is annual amount at the software automatically calculated $2 a month for the income. He has net business income. It shows 6905. I'm going to go over business information pages after that. So just we'll cover it a little bit later. He has a rental property, if you remember. So under details, I entered that he has a condo for rent. You enter either annual amounts or monthly amounts, up to you. So if amount didn't change since 2019 and the rent is still the same, you can enter annual amounts and indicate per 2019 form 1040, or you can enter monthly amounts and be done with it. So you enter rental income, rental expenses, and I think it's prorated automatically here. So we get $900 of rental income on a monthly basis. Oops, something went back. Yeah, I didn't do it quickly. Let's have 1 second. So annual income will be this amount, and it produces our 900. You go through each section of monthly income page and you enter your income, whether you get distributions from S corporation, partnership, pensions for taxpayer or liable spouse again, social security payments for taxpayer and liable spouse, child support, alimony. So it's not tax return. So you don't include just taxable income. So child support is not taxable income on your 1040. However, it's a cash flow method here. So you need to include even non-taxable income on this page. Miscellaneous income, other income, and we get to the total 7807 for this particular case. And like I said here, include all income, even if it's not taxable and may not be included on a tax return. And this page, monthly living expenses, that creates a lot of confusion and a lot of mistakes and errors. So first, I'm going to check doubt as to collectibility. So again, like I said in the beginning, in order to switch between forms, if you want to produce 433A OIC in the output, you check either option under offer in compromise, doubt as to collectibility or ETA offer. If you want to produce 433A instead, you need to select either of this option or CNC. It is very important because the grid below depends on your selection. If you don't make any selection here, some of the expenses may not even populate in the first place. So very, very important. Let me, Will, you wanted to say something? I hear someone. Okay, here. Food closing and miscellaneous.
Yeah, sorry about that.
No, it's okay, no problem. I thought maybe you need to say something. Okay, food closing and miscellaneous. The software has provided the breakdown for all these expenses. So if you don't know what can be included into this category, you can read from the screen and enter the information accordingly. So all this data is also provided in the client questionnaire. So if you use our client questionnaire and you send it to a client for completion, they will see the same breakdown into subcategories, and they will enter the answers in the online client questionnaire. But I want to pay your attention at the bottom of this page, how the proration expenses work for non-liable spouse situation and non-liable person. Remember, here we have non-liable spouse and non-liable person situation. And Jennifer Miller, she contributes $1,500 to household. And Sandy White, the mother, contributes $300. His income is $7,807. So if you divide his income by the total of all people who contribute to this particular expense, and then you multiply it by actual expense, which we have 2216, you will get 1,801 number. So that's the number that he will be able to claim. If you are prorating actual expenses, the standard expenses need to be prorated as well. He cannot just prorate actual expenses and take full expenses for 4 people for IRS standard. So IRS standard is $1,740. And the same way we calculated, and it shows this calculation right here, the standard expense comes to $1,414. So these formulas are going to be printed out on the supplementary schedules to the forms. They will be done automatically, so you don't need to present and explain to office specialist or revenue officer, how did you come up to these numbers? It's all printed out neatly. So all you need is to know how it's actually contributed. So because we are doing offer in compromise, it's selected doubt as to collectibility. This grid has several columns. The first is national, local, or regional standard, so 14. Then actual monthly expense, which is already prorated, 1801. And then we take default for resolution purpose. So in this particular resolution purpose, the default is lesser of standard or actual. So $1,414 will be allowed in this particular case of in compromise. In special circumstances, you can override this expense and take the actual number. If you can prove why, there can be many different conditions. So this is not offer in compromise case. I'm not gonna spend much time on it, but there is option to override it. Once you click on it, you can enter the explanation why you overriding the default, And this particular explanation will be printed on that same supplementary schedule. So it's very easy to override. I'm going to change this default, and it changes back to 1414. Housing and utilities. So if you click on the details for this section, mortgage amount is grayed out. This field flows directly from a real estate, real property page. So you don't enter mortgage payment on this screen, but all others that are highlighted in light blue, yes, you enter all the details. And we come up to $2,870 on total actual expenses. Local standard for this particular county, they live in Florida, Broward County, is $2,456. And we are displaying at the bottom the standards, local standards for this county. So $2,456. And in this case, we're going to prorate expenses again, but this time only for contribution of spouse, because Sandy White, we checked that she contributes only to food, clothing, and miscellaneous. So in this case, only $1,500 additional income of non-liable spouse is included into the formula, and it produces prorated standard expense of $2,060 and prorated actual $2,407. I'm going to launch a next polling question because we still have 3 left. I know we are running a little bit out of time, but we'll get through it, okay? Primary residence fair market value is $200,000 and mortgage balance is $120,000. What is QSV, which stands for quick sale value for OIC purposes? 160,000, 40,000, 80,000, or $200,000? While you're answering, I'll answer one question. Lin Young, is there a way to get the IRS to exclude house to get the IRS house equity if client can't get a loan and it would cost more to sell and then rent a home? For offering compromise cases, it's very difficult. It probably not possible. For installment agreement and CNC, yes. You can get a rejection from 3 lenders that you cannot borrow against the house based on maybe poor credit. But to exclude the equity entirely for offering compromise cases, no. For all others, yes. The question is released, Chris, so minimize your class and you should be able to see it. I see people, 85% voted, so majority of you do see it. Okay, and I'm going to close this poll in 5, 4, 3, 2, 1. And the correct answer, which majority of you got it right, 39%, is 160,000. Quick sale value is 80% of fair market value. So that was a trick question. 120,000 loan balance was not applicable in this formula whatsoever. Remember, I like tricky questions. Okay, next, vehicle ownership cost. Even though we entered 2 cars, 2 vehicles under personal vehicles page, here is only 1 again, because it's non-liable spouse situation, and he will be entitled only to one car payment here. It's $428. It's below the standard. Nothing outstanding here, so we'll leave it as is. Vehicle operating cost. Here we have an option. Both vehicles populated from the personal vehicles page, Ford Explorer and Chevy Camaro. We have an option. If she has a vehicle, we can include her vehicle too. And if he pays, of course, for her expenses. On the marital spouse page, we didn't check that they share these expenses, so that's why I didn't enter her vehicle, but it is possible to enter both. For married couple, you will be able to claim up to 2 vehicles maximum, even if the household has 4 vehicles. Let's say the family has 2 grown-up kids and all of them have vehicles, so it's impossible to enter 4. Only 2 vehicles maximum is allowed. Chevy Camaro has very little expenses. However, this brings up additional maintenance. Chevy Camaro is more than 8 years old, and it has mileage of 100,000 and more. In this tip that we display in this particular page, it says that if the vehicle qualifies, it's more than 8 years old or has mileage over $100,000, you can claim additional $200 in maintenance. And in this case, $200 maintenance, additional maintenance is added to both both to standard amount and to actual amount. So the standard is 772 instead of 572, and the actual 673, and that is what is claimed for offering compromise purposes. Public transportation, I'll skip right over because they have vehicles. They're not quite eligible for public transportation. However, even if people have vehicles and they use it, they may claim public transportation expenses if they do use it, but in this case, they need to substantiate those expenses. So for people in New York who travel to a train station and then take train or ferry or any other type of transportation, they can claim actual expenses on public transportation, including taxi. Health insurance. Health insurance is prorated as well because we marked that she contributes towards payment of the premium. So initial monthly premium is $12.46, but it is prorated. Again, it will be printed on the supplementary schedule, and it will be shown as $1,045. Out-of-pocket healthcare costs, same way, proration. So they have entered here dentist, physicians, prescription drugs, eyeglasses for the total of $312. The national standard for this family, 3 people under 65 and 1 person over 65 years of age. The standard is $293, but for offering compromise, if you can substantiate this, sorry, you don't need to substantiate out-of-pocket healthcare cost if it's below the standard, but if it's over the standard, then yes. Prorated expense came out to $246 for standard and $262 for actual. So default for this resolution purpose is $262, and that's what's going to be claimed. We don't have court-ordered payments or child-dependent care expenses in this case. We do have life insurance, term life insurance. Remember, premiums on cash value cannot be claimed as an expense. It's not allowable. But term life insurance, yes. So both of them, they have term life insurance. Current taxes. current taxes, if the taxpayer and spouse are employed, they are automatically calculated based on the data you entered in employment information page. That's why all these fields are disabled. You cannot type anything in them. The only amount you can type in is estimated tax payments. He's self-employed. He's making $900 in estimated tax payments monthly. And secured debts. Remember I said that they have two mortgages, one HELOC and one mortgage on their primary residence. So HELOC I entered here 254. It's secured debt secured by their primary residence, so that will be an allowable expense. And under other expenses, I entered accounting and legal fees, $250 a month. This can be your tax resolution services as CPA, enrolled agents or attorney. Just be very careful here that if client pays you on a monthly basis, you can include it. If the client paid you in advance, let's say $5,000 in advance, you cannot include $5,000 over 12 months. That will be a no-no. So if you need to help your client and get the lower remaining monthly income for offering compromise purposes or any other purposes, you may include payment plan for your client. And in this case, $250 was paid monthly, and it is going to be an allowable expense. I'm going to launch the next question that we have, number 7. Which asset equity cannot be excluded from OIC calculations as income producing asset? Sorry, I am going to tell you the answer because I didn't cover that material just yet. It is residential rental property, the correct answer. So answer that and we'll be done with it. I'm going to tell you a little bit later why. I'm going to close this polling question and we will continue with the 433A. On this page, the offer amount is calculated automatically. So $392 is remaining monthly income that is left after deducting all allowable expenses, and multiplied by 12 months, get you $4,702. And total available assets equity is $70,370. So our offer amount is $75,072. If you're going with lump sum, and for periodic payment, the multiply is 24 months, so it will be slightly higher amount. We don't know in this particular case how much they owe, so this is just bogus case, but most likely 75,000 offer won't be a very good case if they owe $200,000, so that's kind of high. But if they owe millions, yeah, why not? 75,000, it's a good one. You have to be very careful here. We posted a pinball tip here, important, and we ask you to read it. So you need to take into account the CSAT for offering compromise cases. Even though the calculations show that you can settle for 75,000 your case, it may not be necessarily true until you know your CSAT. This Form 433A and 433A-OIC does not make this determination. However, we have another tool called resolution evaluation, which compares offering compromise to installment agreement and to CNC case. And that tool, you can enter the CSAT there, or if you pull IRS transcripts through our transcripts delivery system, they are going to be populated automatically. So it will tell you exactly whether your client will be a good candidate for an offer or not. And even there, you need to make some analysis of the CSATs and see what will be applied. For example, let's say they have $392 available on a monthly basis, and they have 10 years ahead of them on the CSAT. So they can maybe full pay with this amount over remaining statute. So the IRS most likely will not accept offering compromise if you can full pay over the remaining statute. So of course, if the CSAT is very short and very close, let's say expires in 4 or 5 years, and the IRS will not be able to collect in full, offering compromise may be a better alternative. So read this message carefully. I know we are running out of time, and for those of you who cannot stay longer, I thank you for your time, but I did want to cover business expenses real quick so we know the calculations. And if you cannot stay later today, you're going to get the recording of this webinar in its entirety so you can watch it afterwards. So I'm going to skip right next to this page, general business information. So remember, our client is self-employed, so we're going to continue with 433A and AOIC form data entry. If it would be as corporation owner or partner in a partnership, they don't need to complete this section. So it's only for filers of Schedule CEF that they need to do. And I've entered his business, Miller Construction. So it's construction company. He doesn't have any employees, and he's not a federal contractor. And percentage of ownership is 100%. He doesn't have any other businesses. If you would, you will enter right here all the other businesses that they own. He doesn't engage in e-commerce, so he doesn't sell anything online. So you don't need to complete e-commerce section. Credit cards accepted by business. Yes, he accepts cards, Visa, MasterCard, American Express, and Discover. You do not need to complete this section if you're preparing offering compromise case, but for installment agreement and CNC, yes. Business cash on hand, he doesn't keep cash in his business. Business bank account, only 100% ownership. And here we do not have any exclusion like we have for personal bank accounts. Remember that exclusion where you can exclude equity from personal bank accounts of monthly living expenses plus additional $1,000 is not applicable for business bank accounts. So entire 4536 will be included into the equity in this particular case. Accounts notes receivable. So worth mentioning, you need to enter what's realizable percentage. So he has accounts receivable over 120 days, and he has a 10% chance of collecting this. Original amount due is $5,450. Realizable amount is only $545. Business assets. So yes, that's a question about business assets where we talked about income producing assets. So if business has income producing assets, you may exclude the equity for this asset after you did the analysis of how much this asset produces in income, and whether liquidation of this asset will affect the total calculations. In this case, we entered that he has business tools, and without these tools, he definitely cannot operate. So he may as well close his business. So the fair market value of the tools is 12,400. We check the box income producing asset. By checking the box, the business asset value OIC is adjusted to 0. You can include a note here, and we have a section, IRM section 58515, which talks about income producing assets. So you can include your explanation right here, and it will be printed on your supplementary schedule. So revenue officer or office specialist reviewing your case knows exactly why you excluded the equity. However, real estate property cannot be excluded as income producing assets. So this is a recent addition to the IRM, recent change to the IRM. Before you could exclude even real estate, but now it's clearly stated in the IRM, real estate assets are not going to be excluded as income producing assets. So he has two different assets, tools and business vehicle, business truck, and both of them income producing assets. So there is no asset value for OIC purposes. IRS also has a deduction for business tools and books of $4,850. So you can include that, but since we are doing adjustment for income producing asset, it will not be applicable anyway. Again, these adjustments are valid only for offering compromise cases, so it will not be applicable for installment agreement or CNC case. And now we get to monthly business income and expenses. If you have a good records for your client, if they keep their books in QuickBooks or any other accounting software, or if you have a profit and loss statement generated somewhere else, it is a good idea not to enter all the expenses right on the screen, and instead you can include with your submission profit and loss statement, include reporting period, and this is very important. It's going to prorate the expenses to determine the monthly income page based on what reporting period you entered. So I entered the entire 2019, so whatever income for reporting period I entered, which switched to monthly amount. Give me a second, let me calculate it back. Which I think I originally entered these numbers. I don't remember exactly, but like I said, instead of you entering each category of income in the form, you can just check the box and include your profit and loss statement. And on a monthly page, you do the same. So you enter expenses. Something got wrong, so I didn't probably enter correct numbers. Okay, anyway, in your handout materials, there is a printout of completed forms, and it will have correct numbers. It doesn't make any difference right here. So this concludes the preparation of Form 433A and 433 AOIC. If you need to do 433A, you need to go back to monthly living expenses, change resolution to installment agreement or CNC. For example, if I want to do full payment over remaining statute, the numbers are going to be, oh my God, because of the business income, everything is changed right now. Let me quickly fix it right there. Let me check if I see what numbers I entered. Give me a second. $28,650. Okay, let's just leave it 6905 is net business income, and where we were living expenses. Okay, so right now our remaining monthly income changed from 392 to 592 because the resolution purpose changed from doubt as to collectability offering compromise to full payment over remaining statute. Whenever you do this change, always remember to click Save on this button before you go and preview the page. So without this, if you went to doubt as to collectability and you didn't click Save, it will still show 433A right here. So you need to make click Save in order to get the correct preview. Switching to a different page without clicking Save will still auto-save all your data. So that is how it's done. Another thing that I didn't mention in the beginning is that in Pitbull Tax, all forms for collection information statements for individuals and for businesses, they are synchronized. So for example, if you started doing 433A or AOIC, and all of a sudden you realize that you need to prepare 433F, it's very easy fix. It's actually, you don't need to do anything. You just need to go to form 433F and you will be able to print it out. It's all completed. You don't even need to enter any data. So if you click on this, I didn't make any entries directly on this form, but it's completed. You just need to print it out and get it signed by your taxpayers. So that is very easy to do. If you started doing data entry in client questionnaire, all you need to do is populate it to the forms, whatever client completed, and it will flow directly to 433A, AUIC, and because they're synchronized, it's going to go to 433F as well. We've recently made a change to client questionnaire, which allows you to avoid the duplicates that a lot of you complained before about. So whenever you click to verify and populate to forms, now we have two options how to populate data. You can click to override data in forms. So basically it will erase all your data entry from 433A and AOIC and F, and it's going to populate all your data from client questionnaire to the forms. Or you can choose option B and second option and preserve data that you already entered, and it will just add data from the client questionnaire in addition to what you already have before. It may create some duplicates if you did a data entry in both for the same type of data, but at least now you have two options, and you can avoid the headaches with looking for duplicates. I know I've taken a lot of your time, so we're 15 minutes past the hours allotted. So I'm going to launch the last questions for today, the 8th question. And it's very simple. Did you learn something new today? Yes? No? I knew all this? It was so boring that I fell asleep. I promise, folks, we are going to get to you with all your questions. So we are going to get the data from GoToWebinar once we finish, and Will, Dylan, myself, we are going to address all the questions that you typed in and we didn't cover. I'm sorry, but this topic is very immense, and before I close the final post, I didn't stop and I didn't explain one thing that I wanted to mention, and I did include it in handout materials. So for the retirement assets, for example, a lot of questions we have when people have 401ks or IRAs with a large balances there, and they want to do an offering compromise. So that large balance in a retirement account creates a problem. So it disqualifies them from offering compromise purposes. There is a workaround on this, and the IRM section that I posted will clarify this. I posted even the entire table from the IRM in your handout materials, which basically says that if your client is at retirement age or very close to retirement age, they put it as 1 year to retirement, but I've had successes when it was even 3-5 years to retirement, and they have large balance on the retirement account, and they rely on these funds in order to survive after they retire. So in that case, you can exclude the equity from the retirement account and instead include it as an income portion of it. And how to calculate the income portion of the retirement account. Also in your handout materials, I put a link to publication 590B, which has life expectancy tables for the taxpayers, for single taxpayers and joint taxpayers. For example, if your client is 65, so the table, I believe it will give life expectancy 20 years, 20.2 or something like that. So this is what you do. Let's say you have 200, 200 is too much, but let's say the client has 20,000 on retirement account. So you take this retirement account and you divide it by life expectancy of 20 years, and you get that every year you will get 1,000 of income from this retirement account. And that 1,000 you accordingly prorate to monthly, which will give you $833 in additional income. So instead of taking equity and screwing up your offer, you can exclude the equity from retirement account and instead include it as an income portion of your case. And most likely it will help you out, and it will create a better looking case than if you would give away the entire balance on the retirement account. And of course, for this particular move, you will need to provide explanation. And explanation is very well done in the software by adding notes to your forms. On every single page of IRS form on the data entry, you have these two buttons, Add Notes and All Notes. So Add Note, you can choose any section and add your notes. So you can explain, for example, line description will be retirement accounts, and you'll explain what you did, because you're going to attach to your offer statement from the retirement account, and they will see, regardless, that they have 20,000 in the balance, available balance. And in that particular case, you would need to explain why it is excluded and why additional income is added, which you cannot show otherwise. So refer to your handout materials and you will be able to help your clients better. So I think we've yeah, 1% still says it was so boring that I fell asleep. Thank you so much. It's only 1%. I'm flattered. 98% of you said yes, that you learned something new. I think we will need to schedule even more time for next webinar, more than 2 hours, but in that case, you will definitely will fall asleep if I continue talking for more than 2 hours, 22 minutes already today. Thank you so much for joining us today. I appreciate all your work that you worked with us with this technological issues that we had with handout materials and with polling questions. I'm happy that you stayed till the end and listened to it. If you do not have Pitbull Tax Software license yet and you liked what you've seen, you can call our guys, and I'm going to put their information right on the screen. So Will and Dylan, the extensions are right here. Their emails, if you want to email them directly. You can sign up for a free trial on this link. And well, this link actually goes to IRS transcripts, but on our page, you can find how to get free trial. We offer 7-day free trial. You can create 3 different cases in the software. And if you need more time, you can just give us a call and we'll gladly give you more time to play around and determine whether you want. But as a prize for staying so long with me and working with these technological issues, I'm gonna give you something that I didn't want in the beginning, but anyway.
Hey, Irina,
Yes.
I think the poll question's still open, so people can't see the last slide.
Let me close that poll question. Sorry. Thank you.
Thanks.
Okay, it should be any minute. Okay, perfect. So this is Will's and Dylan's contacts and their email addresses. So if you are interested in trying or purchasing the software today, this is what I'm gonna give you today. Even if you're existing customer and you spend today with these guys 1,000 or more, I'm going to give you free white labeling add-on, which is valued at $2,500 a year. So for the first 10 callers to these guys on these numbers, for people who spend 1,000 or more today, you're going to get free gift from me, white labeling add-on for the entire year. So yes, so those of you who stay till the end, you are now rewarded. And if you are thinking of purchasing and you're not sure whether you want to do it today, you can definitely go on a free trial. But if you want to get this offer, it's valid only for today for the first 10 orders. So again, thank you so much for joining us today. I'm very flattered that you stayed with us, and hopefully that we did learn something new. And I wish you all the best and good luck with reopening and coming back to your offices. Please stay safe and take care of yourself and your families. Thank you so much. Bye-bye.